Rookie traders tend to make a big mistake that costs them a lot of money and a lot of frustration. And this week, I'm going to tell you what that mistake is and how to overcome it. Plus, I'll do my normal market analysis and we'll look at the trade of the week on BTCT, which also is an example of the big mistake. But let's get right into that first. And that is, we have to recognize that emotion is the enemy of every trader. The thing we're trying to overcome in the market is not the market itself, but it is ourselves, because we are our own worst enemy. In the market, it's quite common to realize that people tend to buy and sell at the wrong time. They might be focused on the right stocks, but they time their entries very poorly because of the fear of missing out. It's a very common emotional mistake that leads to losses and frustration. Now, the key thing to remember is that when you buy a stock that is running up quickly, you are likely chasing it with an emotional group of buyers. And this fear of missing out, which causes us to chase the stock higher, is something that will cost you money. So how do you know when you're chasing a stock higher? Well, it's very simple. If you draw a trend line and price is far above the trend line, then you're chasing the stock. And if you wait instead for the stock or the market to pull back to the trend line, it's a great way to buy a strong stock or a strong market at the right time and get in at the best price. So let's look at some examples. We'll begin with the Russell 2000 index, which we'll look at again in a moment. But for now, let's just focus on this upward trend line right here. On the election news, we had a break to the upside. Now that's a very positive signal. The market is breaking out through resistance from optimism, from low volatility. We talk about that as being a good place to buy. But notice that in the latter part of this week, we've been actually moving lower. The reason is because where our trend line is and where price got to, there's quite a big distance there. And so again, if I draw a nice orderly trend line, when I am way up here, I am far above the trend line. And what happens is when price runs away from the trend line, it tends to come back to it. It runs away, it comes back to it. And so the better time to be a buyer is when you break the pullbacks at the trend line, not when the market runs away from the trend line. Now, your emotions, your desire to get in the stock, your fear of missing out will be strongest when price is running away from the trend line, because you're watching the stock or the market move up day after day, moving up strong, and you think, I'm missing out. I must buy it now, instead of waiting for that strong stock or market to go on sale. So let's take a look at another example. Here is Tesla, which also benefited from the election given Elon Musk's alignment with Trump. Here is the upward trend line. We run away from the trend line, we come back. We run away, we come back. These are the points to be a buyer, not up here. All of the headlines, all of the excitement was at its highest early in this week on Monday. But by the end of the week, the stock had pulled back. And I would say there's still a good potential for it to pull back even more. And the reason is because people were chasing the stock higher instead of buying a strong stock on weakness. So the stock is strong if it's in an upward trend. If the bottoms are rising, you're in an upward trend. What I don't want you to do is chase it when it runs away from the trend line, but wait for it to come on sale, come back to the trend line, and buy it when it breaks the pullback at the trend line. All right, let's get into this week's market analysis. We've had quite a crazy week in terms of volatility. And so what I want to show you is the chart of the S&P 500 and how it has moved over the past little bit here. This is the 240-day daily chart. You can see that this market is in an upward trend. That's great. We ran away from the trend line. You could draw a line across these tops. This is called a rising wedge pattern. And we have now pulled back to the trend line. Now it should bounce from this. I'm a little concerned that we may break down through this floor and then start to test this support, but the daily trend is still up. And if we look at the 3-year weekly trend, it's still up. So we have a bull market. If we look at the short-term trend, you see the volatility, and that's an indication of uncertainty. And when there's uncertainty in the market, you have to be a little bit patient and not chase the market higher. Let's take a look at the NASDAQ. QQQ is the symbol. Again, the trend is up. The buyers are in control. We ran away from the trend line. Now we're pulling back. Just as it did here and then here. These are the times to be a buyer, not when you're running away from the trend. Now we're at the point where we may get a new buy signal. Why? Because the market has pulled back to the trend, and if it can bounce off of it and break the trend, then we should continue this upward move. Let's take a look at the Russell Small Cap Index, IWM. Again, we talked about this already, but there was that beautiful ascending triangle. This is a strong buy signal, but buy it on sale. Wait for the pullback. That's in there now. Then you can watch the short-term chart. I'm jumping to the 15-day hourly chart. You want to see this pullback broken. If it can break the pullback from a rising bottom, then it should resume the upward trend. That hasn't happened yet. So for now, be patient. Wait for the break of this pullback. Canadian market, T.XIU is the symbol. Daily trend is up. Run away from the trend line, pull back. Be a buyer here. Run away from the trend line, wait for the pullback to run its course. If I go to the 1 month chart, you see that the general move is up, but you wait for the pullback and then the break of the pullback. Don't chase. This is FOMO buyers. Look at volume is strongest because the FOMO buyers chase things higher and there's a large crowd of them. Now we're in the pullback phase. Much like here, we may pull back in the short term, but the trend remains up. Let's take a look at gold, which has had a really great run. Anytime the trend goes parabolic and you run away from the trend line, you are very risky. I talked about that last week, how gold was risky for a pullback. It's pulled back a little farther than I like. If we go to the 1 month, 2 hour chart, you can see it's been a pretty sharp sell-off. When was the sell signal? Well, there's the upward trend. That was broken. There's the build of a falling top, and that was broken. And that started the downward slide. In the short term, I would say gold should be avoided. Let's take a look at oil. USO is the symbol. The general trend here is down. The sellers are in control. So generally, it's one to avoid. Now, the long-term picture is pretty much neutral. We're in this pennant pattern here, or maybe even an ascending triangle. We're at a point where it should bounce, but oil has been dead for almost 3 years. Just hasn't been a good market to be in. Let's take a look at the US dollar. UUP has gone up. You can see the dramatic rise in the US dollar because Trump getting elected, because interest rates are likely to stay a little higher in the US. That's good for the bond market. We'll talk about the bond market in a minute. 3-year chart, hitting some resistance. That may be an issue, but still the US dollar is strong. I would not chase it. I would wait for pullbacks if you're a currency trader. GBTC, Bitcoin, had a great week. It broke the downward trend right here from a rising bottom. It pulled back to the trend line, which we expect. It then broke off the trend line and had this nice run. Great. Now it's chasing. If you're buying here, here's your trend line. Look at how far above the trend line we are. And so it's dangerous to be a buyer here. Now, is it a hold? Absolutely. If you're in Bitcoin, I don't see any reason to sell it. But I don't think it's a buy at this point because it's running away from the trend line. You can see here on the weekly chart how far we are above the trend line. Look what happened here. There's the trend line. We ran away and then spent the next 8 months going lower. You don't need to have your money in something that's dead for 8 months. Wait for the market to improve. TLT is the symbol for the bond market, and you can see the trend here is down. We are at some support, and I do get a sense that the market's trying to bottom here in the bond market, and we may see this get broken. If that happens, that'll be supportive for small cap stocks and perhaps a good place to play. All right, so my ratings then, US large cap, NASDAQ, small cap, all the same rating, neutral short term, bullish long term. Canadian market looks a little better, still short term bullish and long term bullish. Gold and oil, bearish in the short term. We've seen quite a pullback in gold. That was overdue, but still neutral longer term. US dollar bullish in the short term, long term bumping up against that resistance, so I'm a little bit cautious about that. Bitcoin bullish on both time frames, but again, I don't think it's a great trade to buy here, more of a good hold. And bonds, bearish in the short term and neutral in the long term. All right, let's look at the trade of the week, and there's another example in this chart where we can see the FOMO traders taking the market higher. Now, before I get into that, I want to remind everyone that each week I do a free newsletter, email newsletter, And in that, I pick stocks, I give you trading tactics, lots of different things that are beneficial if you're an investor or a trader. It's free. Just go to stockscores.com. On the homepage, you will see a place where you can register for that and keep updated on what we're doing at Stockscores. All right, let's get into the trade of the week now. And here it is, BTCT, which had a great move this week. The buy point is right there on the action candle. It breaks from low volatility on a stock that's trading abnormally. That's what I love to see. And the stock quickly moved higher. What I want to point out, however, is look at the volume here, basically at the high. The buyers will be strongest right before the stock collapses. If I draw the trend line, look at how far above the trend line we were. And it ultimately pulled back, stabilized, and then went sideways all day. So there's two important lessons in this trade of the week. First, you buy the break from low volatility. That was great using the action candle indicator available at stockscores.com. Second, you don't chase it. When it moves higher, do not be a buyer up here. Maybe on the break of the pullback right there or the initial break from low volatility, but don't chase it. Hope you've enjoyed this week's Stock Scores Market Minutes. If so, click on the like button. Please make sure you're subscribed. I appreciate it. I want to get to 30,000 subscribers before the end of the year, and I'm going to need you to help me with that. So click on that subscribe button. Hope you've enjoyed this week's Market Minutes, and if you're in the market, make sure, as always, that you trade well.